Financial Argument. Follow us on YouTube.
Let's get into the economic collapse financial news. Now, as we know, the UK is getting ready to exit the EU. But the central bankers, they are not going to make it easy for the UK to leave. Because what we're seeing right now is that the EU is saying, listen, and we know that Mario Draghi said this before, they need to pay up and pay their bill. And right now what they're doing is they're saying that the UK owes around 60 billion euros. And they need to pay up right now. But government lawyers concluded there is no law or treaty to compel the UK to pay the bill the EU officials have estimated at 60 billion euros. And we see at this point the central bankers, they are doing whatever they possibly can to stop the UK from leaving. And I don't believe this is going to be the last thing they're going to try. They're going to try other things. We're probably going to see a lot more come out as the time approaches. And we're already seeing that they are trying to stop this, because we know that Mario Draghi came out and said, listen, anyone else that wants to leave the EU, they're going to have to pay, they're going to have to settle up their account. And we can see right now that once one country leaves, you know it's going to be France, you know it's going to be Italy, you know it's going to be the Netherlands, you know Germany's going to look at this and say, you know something, we better jump ship right now, and they're going to leave, and that means the EU is going to collapse on itself. And that will send shockwaves across Europe and here into the United States, Canada, Australia, because a lot of the banking systems are all intertwined. And we will see chaos. And it looks like we're heading towards this point. I mean, think about what's happening in March. We have the Brexit. We have the debt ceiling in the U.S. We have what is going on with Trump and Obama and everything else with the deep state. And we can see that going forward, that things are really going to get chaotic. I mean, Cliff High said it. Starting in March, actually David Stockman said also, starting in March, things are going to get chaotic. And as we move throughout this year, it's going to accelerate. Now, a couple of reports ago, we talked about a soda tax in Philadelphia. And of course, these city officials, you know, they implemented a soda tax thinking that, oh, this is going to bring in a lot of revenue and this is going to be fantastic. And what we saw was that people had sticker shock and sales started to drop off. And they were reporting about 30 to 50% drop in beverage sales. And then we had bottlers, distributors saying, okay, listen, we're going to have to start laying off people. Now, of course, there's no way that after a month or so or a couple of weeks, they know that, okay, things aren't working out. Because, you know, in the beginning, there could be sticker shock and people will get used to it and they start paying it and they start ramping up and buying their soda again. But Pepsi right now is taking advantage of this, saying, yes, it is the soda tax, and we're going to be laying off about 20% of our workers in this area. Now, Pepsi employs about 423 employees in the city, and they're going to be laying off about 100 people right there. And we can see that companies, they do make excuses of why they are laying off, and for some of the people there, they don't understand why they're being laid off at all, because Pepsi reports $35 billion in gross income and $6 billion in profit last year, and they can't figure out why would they have to lay off people right now. Well, it looks like they're gearing up for what is coming. And we saw this back in 2008 where companies were laying off prior to the market coming down. They already know that things are rapidly deteriorating. I mean, we look into retail right now, we see retail is a complete disaster. February store sales, they have completely imploded because of declining store traffic. Sales have slumped by 17% from January 31st to February 23rd, compared to the same period of last year. Now, which is kind of odd, once again, and we looked at this before, unemployment has continually come down. How are sales in stores getting worse? They're not moving to online. All these stores have online presence. where they can go and they can purchase the goods right online. And if all these stores are suffering and all the online sales are not picking up the slack and everyone is working, something is wrong. Someone is lying. JCPenney down negative 3.2%. Macy's down negative 4.2%. Kohl's down negative 5.1%. Nordstrom's down negative 3.7%. We see that Neiman Marcus right now. This is the Texas-based luxury retailer. They have about 42 stores around the country and 2 Bergdorf and Goodman stores in Manhattan. And they're saying, well, things aren't doing too well right now. They hired an investment bank, Lazard Ltd., to help restructure their $5 billion in debt. And right now they're saying there's no risk of bankruptcy, but we've heard this before. And we know that H.H. Gregg, bankruptcy, BCBG, bankruptcy, closing stores, laying off people. And we see that this is spreading. It is not improving. It is not getting better. Actually, every time we report on this, it is getting worse and worse as time goes on. The economy is deteriorating as we move into the spring, and it's just going to get a lot worse. And there are individuals out there telling us that, yes, we're going to have problems in the second half of this year. Now, if we look at all the pieces to this puzzle and we start putting it all together, we can see that GDP completely manipulated. We know that's in the negative territory. Look at Shadow Stats. He does the calculation, not the manipulated calculation. We know unemployment is much higher than what they're saying. It's not 4.8, 4.7%. We know it's around 23, 24, 25%. We know a lot of people went from a full-time job to a part-time job. We understand that housing prices are coming down in many locations, and people are lowering their prices over and over and over again because traffic is not there. Even in the 20 cities that Case-Shiller looks at, we're having a flat line of housing prices, and they're starting to drop. Retail is a complete disaster. We understand from UBS the credit impulse is below zero. Credit is going to freeze up. We're seeing that core factory orders, they have dropped, and they're only at 0.3%. Now, right after the elections, they shot up to 2.5%, and we're back to where we were. That whole entire bounce because Trump was elected and he was going to bring back jobs, that is fading away right now. And we know he just can't bring back manufacturing jobs, by flicking a switch. It's completely impossible. And what we're seeing is a lot of the dumbest kind of money. Well, it is pouring into stocks with a vengeance. And one of the traditional signs of a market top is individual investors finally succumbing to the lure of apparently easy money and pouring their savings into the stock market. In the past, this dumb money flowed into equity mutual funds in general, but today it's favoring ETFs. And this is exactly what we see. The insiders, they sell off, and we see the retail investor come in and thinking that this is going to continue on, things are great, and we see it just not with the stock market, but we also see it in real estate. All those hedge funds and investment companies that were purchasing real estate, they're selling their homes right now, selling it to speculators, flippers, and whatnot, and they're going to be holding these homes. This is what happened in 2008, and it is now accelerating. We know that Cliff High, Charles Nenner, Harry Dent, James Rickards, David Stockman, Bank of America were all out there saying that the second half of this year, things are going to rapidly fall apart, and it is going to accelerate. We now have Citibank we have Matt King from Citibank saying that we think you should sell at this point because the second half of this year is going to be a complete disaster. We even have JP Morgan out there saying that we see an increasing risk of sell-off in the near future, talking about the second half of this year. So when we look at all the pieces and everything that we've been talking about, and we look at every economic sector, we can see how this is all coming together right now. And the last piece of the puzzle is the complete collapse of the economy. This is where we are headed right now. It's not going to improve. It's not going to get better. It's not going to all of a sudden magically turn around. I mean, this is what everyone thought back in 2008 when the Fed was out there telling you, don't worry, we have the subprime contained, and everyone believed in the corporate media saying, oh, don't worry, they told us it was all completely contained. We're not forecasting any type of recession anytime in the future, and this is the year that we had the recession begin. Subprime securities were AAA. We heard all of this. But behind all of that, when you looked at what was happening, real estate, prices were coming down, traffic was drying up. Retail, stores were slowing down, purchasing was slowing down. Companies were laying off quietly and slowly, so no one knew. Companies were failing, but everyone kept it on the Dow low. Bear Stearns, Lehman, and the AIG. No one knew what was going on. There were certain few, yes. The credit market was freezing up. Things were rapidly deteriorating very, very quickly. And it just didn't happen in a day. It happened year after year. It slowly fell apart until the system couldn't take it anymore and it broke apart. Well, we've been tracking the same exact thing in each sector, each one breaking apart, each one failing. And here we are today. Here we are at the end game. Here we are when everything starts to fall apart. Now, when it starts to happen, you're going to see silver move up very quickly. You're going to see gold move up very quickly. You'll probably see Bitcoin move up quicker than it is today. Probably go much, much higher because that's not really manipulated or regulated like silver and gold. But when you see silver and gold start to shoot up, and I'm not talking about $5, $20, I'm talking about hundreds of dollars, you know we are getting very, very close. And things are rapidly falling apart. And when it shoots up 100, they're going to try to smash it down. Now, they're going to smash it down maybe by 50, but it's going to shoot up once again. And when you see this topsy-turvy type of action, well, that's the last call. That's when you better get everything ready and prepared and ready to go here, because the last puzzle piece is being inserted